Now, in currency markets, the rand has hit its lowest level since August, pushing past the 18 rand mark to the greenback. This comes as emerging market currencies struggle following the Trump victory, which fueled dollar strength. We're now joined by RMB's fixed income and commodities strategist, Manqoba Madinane, for greater insight on what's at play in that scene. Thank you so much for your time, Manqoba. Now, the rand has been extremely volatile after the U.S. election. I mean, for a while, it seems that it wasn't sure of which direction to take, going as strong as around 17 rand 25 to as weak as around 18 rand 35 against the dollar. What's been the risk gauge here?
I think it's important to reflect on the fact that the recent movements do not or are not reflective of the underlying core fundamentals at play locally, but really the global impact of the US elections risk event as one. Number two, that mated with a relative global markets disappointment around a fiscal support package that was anticipated out of China. That support package, I'm personally encouraged by what China has implemented. But of course, a little bit more was expected by the markets. So the markets, particularly the markets outside of the US economy, in risk off, whereas the US markets themselves have been in a strong risk on mode post the re-election of Mr. Trump.
Yeah, and I mean, we've really taken a hit considering also when you talk about the disappointing China fiscal package. It seemed quite big, but clearly not big enough, also affecting our resources, of course, that has also weighed on the rand. And I'm just thinking because, I mean, with the Trump coming into power now, and of course we do have those geopolitical tensions between China and the US. Do you think that there could be a significant knock on the rand where the rand could catch a cold from a sneeze from the US-China tensions?
The simple answer is yes. But the real channel of flow really is on the broader implications for the Chinese economy. There's obviously a material downside risk to China's exports. Material downside risk to China's growth that is currently evolving, and we are heavily exposed to the Chinese economy ourselves. So we would certainly be hit, but we need to emphasize that these fundamentals detract from the fact that there's increased confidence, investor confidence within the South African markets, and we see that when we look at what is happening in the bond market, the excessive volatility that we've seen in the rand is not really reflected by those markets. So the bond market, is telling us a message that the long-term investor remains relatively optimistic, and we take the cue that will probably still inform a very bullish outlook long-term for the rand as these fundamentals become more and more reflected. Important also to reflect in light of those underlying fundamentals. We've had a second consecutive month of positive outperformance in the mining sector itself. That tells you something, that the incremental reform agenda or the unlock that is in play. The mining sector is buying into that. Admittedly, the rebound that's happening is not really in the sectors that need the key rail infrastructure. It's the PGM sector, but nevertheless, it is a positive signal that is likely to benefit the rand from a terms of trade perspective. So all of that basically says that once the noise is muted out the room, which might, take a few months, but we will get there. But once we get there, we shouldn't be surprised by a swift rally in the rand.
And I mean, one of the fundamental areas that have been informing us of the moves between the rand and the dollar is the interest rate cycle. And I mean, we are now in the interest rate cutting cycle. Although it seems that it has been trumped by the U.S. by the U.S. presidency at the moment, could that be just a short term? And as you're saying that maybe could lend to the long-term fundamentals of appetite for the rand?
There are two opposing forces at play here. The Trump trade itself is perceived to be reflationary. And it's easy to see why.
Yeah.
But the one thing that we forget is that the other force that's at play, Trump wants to actually significantly increase U.S. oil supply, ultimately significantly reduce oil prices, and that may have a counterbalancing disinflationary impulse. So with that, there's still. It's not yet certain that this interest rate cycle is changing, but certainly there are risks that the longer term trajectory of US interest rates, for instance, it may change because we are currently expecting it to fall.
Yeah.
But my point here is that I just want to emphasize that there is a counter disinflationary impulse that may play out as Trump implements his vision for the U.S. economy. Yeah.
All right. Well, thank you so much for that, and really just letting us into the developments there in the currency scene. Manqoba, that was Manqoba Madinane from RMB.